Good morning, everybody. I've double, triple, and quadruple checked the feed. Hopefully, we're all set. If anyone has any trouble with getting on, you can contact Nikki Squiglia at PM Business Advisors. So you can contact us through our website, and we'll help. This is also going to be recorded. So if there's a problem, you could definitely listen to the presentation later on. Enjoy yourself. My clicker works. We're all set. We're in lovely downtown, I guess midtown, New York City at 14 Penn Plaza. I want to thank everybody for joining us today. We have a nice mix of attendees, so we're shooting live from the offices of Prager Metis, PM Business Advisors. I'll talk about who we are in a minute. I want to thank Prager Metis for hosting this event. We have several people in the room. I'm going to go through the slide presentation. It'll be about a half an hour, 45 minutes. It's the first time doing this. We'll be hosting this presentation every 2 weeks as well, so if you have staff at your firm you'd like to join later on, that would be great. And just for host people in the room, if you sit behind the phone, you behind that way, you will not be on the camera. If you're on this side, you will be on the camera. So, you know, depending on how good looking you are, you can make that decision. All right, so here we go. So first of all, I wanted to talk to you about what we do, PM Business Advisors. We have a nice mix of corporations and CPA firms watching us in the presentation today. So I want to give you a little bit of background of who we are. So we are a business and tax advisory firm. We like to call ourselves the recovery engineers. A lot of what we do as a firm at PM Business Advisors is we go into companies and we analyze what they're doing from a tax and business perspective and look how to help them recover items that they may be overpaying on, okay? And then also help them going forward on making changes on those operations. So almost all of our projects are an integration of tax, accounting, and operations. All right, now, what does that have to do with sales tax? Well, it has a lot to do with sales tax, but let me just share with you, we have 3 spots in our practice that we break ourselves down into. We have our business advisory practice, which involves accounts payable recovery, unclaimed property recovery, strategic sourcing, and license and royalty auditing. And we have Chris Hull, one of the license and royalty auditing experts with us here today. Also from the federal tax advisory service side, we have the R&D tax credits that we work on, cost segregation, fixed asset analysis, transfer pricing. We do some IC disc and energy tax credit work. And then finally, our SALT advisory practice is what really drives our sales tax practice. We do a lot of work in sales, income, property tax, with really a concentration now on sales tax. So when we go into companies and we help them identify their overpayments, we notice that they've overpaid potentially on sales tax, the next question is how do we become compliant? So in addition to the recovery work, a large part of our business is consulting on the sales and use tax side. So we do work on VDAs, tax matrices, credits and incentive projects, a lot of audit defense work. I would say in PMBA, probably about 70–75% of the work that we do is sales tax related in one way or not. Little background on myself. So work experience, I have about 20+ years of progressive state and local tax experience. I started out at the Big 6, Coopers and Lybrand, so not old enough to be Big 8, but old enough to be Big 6, there you go. Tax director for a publicly traded wireless company called OmniPoint Communications. And then since 2002, I've been in the consulting and public accounting area, holding various leadership roles in that area. My background, I'm considered a thought leader. I do a lot of work in sales tax. I speak a lot, TEI functions, host a lot of webinars. We publish a lot on PM Business Advisors. If you take a look and get a part of our Trusted Partner Alert or our Sales Tax Alert, SALT Alert newsletters, we send updates on usually a weekly or bi-weekly basis. We like to talk a lot about sales tax. We like to talk a lot about what's going on and really prepare our customers and our clients for what's going to happen in the future. We're always looking ahead. So in addition to startups, middle market, we also have 15 of the Fortune 500 as our clients. So we're a smaller firm. We have about 20 people in our group. Like I said, the majority of them focused on sales tax. But we have a great client base, very diversified, and we can share those experiences from our startups to our Fortune 500 companies across the board. So what do we do outside the office? Well, after hours, I have 4 kids that keep me very, very busy. 3 are in college right now, so not quite as busy as before. I like hanging out, beautiful New Jersey beaches. I am a New Yorker at heart, but I do love the Jersey Shore, and I spend a lot of time there. And then at night, you'll see me walking my beautiful Neapolitan Mastiff, Sherry, walks at night in my neighborhood. If anyone doesn't know what a Neapolitan Mastiff looks like, there she is. Okay, I told her I was going to take a photo of her this morning as I leave, and so she just wanted to say hello to everybody. So here we go. Let's get on to business. We're not going to talk a lot and spend a lot of time about what's really happened over the last 20 years, 30 years. I'm going to try to encompass it in this one slide. We're really going to focus on Wayfair, and more importantly, we're going to focus on what companies should do now and what CPA should do because of Wayfair. But I've got this one slide that I think helps us encompass what's happened over the last 30 years. Sales tax nexus can go all the way back to a case called Complete Auto, where basically the court came out and decided that they were going to create a 4-part test to take a look at whether companies have a presence in a state. And at the end of the day, there's a phrase called substantial presence or substantial activity that the court came out with. And that rule was in place for many years. It wasn't necessary, it was loosely defined by the court back then. They didn't pick anything specific, whether it was dollar amounts or physical assets. But they basically said there had to be, they really needed to be a substantial presence or substantial activity in that. Well, soon after that, not too soon after that, I guess about 15 years later, Quill came along. And Quill was a really interesting case because Quill challenged a lot of the thoughts that the states were really hid behind for many years in terms of that, did there need to be a physical presence? So since 77, a lot of states basically equated that phrase to physical presence. And so Quill came out and said, you know what, we're going to challenge that. The states came out and said, and we're going to see if we can go beyond physical presence and create almost like an economic nexus challenge. So the states attacked physical presence, and they lost. And so Quill came out, and the Supreme Court basically ruled that no, there has to be physical presence in the state, and that you cannot, back then, tax catalog companies that had a headquarters office in New York and locations all across the U.S. So for the most part, the concept of physical presence was quelled, I guess, at that time through Quill, but that did not stop the states from fighting back. Shortly after 1992, I think we all realized what happened. This little thing called the internet came along, and it really changed the way that business took place, especially from business to business, consumer to business, whatever you want to do. So starting in the early 2000s to 2005, the states started getting concerned that they were losing a lot of economic activity, a lot of tax dollars through e-commerce. And they started thinking about ways that, all right, we know we've got Quill out there and there's this physical presence test, but how can we get beyond that? So they created different types of tax laws. Okay, some of those laws were affiliate nexus laws. One of the big changes was really through Amazon. I think in 2008, New York was one of the first states to come out with Amazon laws. And as Amazon laws basically took a look at a way of how Amazon had economic activity in the state and tried to come up ways to tax that activity. The states were pretty aggressive, and Amazon did roll over after a few years and did agree to voluntarily enter into agreements to collect sales tax in various states. And as of today, Amazon, I think, collects in almost every major state sales tax. But Amazon wasn't the only player. And as Amazon grew and e-commerce grew, thousands and thousands of companies came along, and states had to figure out ways to force those companies or try to compel those companies to collect sales tax. So between 2012 and 2017, we had many, many, many efforts by states to try to tax e-commerce transactions. Things such as click-through nexus. The concept of economic nexus was introduced by many people. We had non-filer reporting rules, and then we had marketplace. Non-filer reporting rules and marketplace, non-filer rules were first created by Colorado. Basically said, Colorado said, all right, listen, you don't have to collect sales tax if you're a remote seller, but you have to tell us who all your buyers are, and you need to send us their information. So a bunch of states jumped on that. And then economic nexus and non-filer reporting kind of merged into this concept called marketplace nexus, which happened last year with several states. I think Connecticut, Alabama, and Rhode Island are 3 states that passed laws in 16 and 17. And marketplace was really a blend. Marketplace said, okay, great, listen, we want you, if you have a certain amount of sales, to register and collect sales tax in our state, and we really think you should. So that's the economic nexus model. So if you have $100,000 worth of sales in our state, we want you to register and collect, but you don't have to. But if you don't, we want you to report back to us. We want you to inform your buyers that they may owe use tax in our states, and then we want you to report back to us who those buyers are for your product. So this continued to evolve until December of this year, January of this year, actually, when we got notice that the Supreme Court would actually hear the South Dakota versus Wayfair case. And again, South Dakota versus Wayfair case is probably a whole nother presentation. But for those of you that don't know what happened in South Dakota passed an economic nexus law. They immediately forced that law and they pushed it through the administrative process and right into the judicial process, and really got the state of South Dakota to make a ruling as soon as possible on whether this law was constitutional or not. Well, the state of South Dakota ruled it wasn't constitutional, and they immediately went to the Supreme Court. They got their day in court, and obviously, as we all know, the Supreme Court came out and ruled in favor of South Dakota, which has changed, the way that sales tax is going to be applied across the U.S. So let's talk a little bit about Wayfair versus South Dakota. Just check my clock here. All right. I'm sure we've all heard about this decision. Again, I'm not going to spend a tremendous amount of time on the decision. I want to talk about the impact and what's happening every single day right now with each state. But it was a 5-4 decision that overturned the 1992 Supreme Court ruling in Quill. That precedent that existed for many years that barred states from collecting sales tax unless there was a physical presence. In making their decision, the justices ruled that South Dakota can collect sales tax from online retailers like Wayfair, which was sued by the states. South Dakota, right now, is actually going back. They have to finish the judicial process within their state, but we believe that's all going to be done and flushed out by the end of the summer. And there's many other states that are not waiting to move forward on these laws. And the court, effectively reversed the 1992 ruling that allowed states to levy sales taxes only on those businesses with brick and mortar locations within the state. The majority opinion found that Quill's physical presence rule is flawed for 3 reasons. First of all, physical presence is not necessarily the right interpretation of the Commerce Clause nexus requirements. Okay, so it shouldn't be the end-all, be-all determining what economic activity is in a state. The court found also that the physical presence rule creates rather than resolves market distortions. There were a lot of companies that wanted the Supreme Court to rule in favor of South Dakota. All the big retailers, Walmart, Target, they all have locations across every single state and are forced to collect sales tax on every transaction that they do over the internet in every single state. All the small businesses, all the mom and pop shops sitting across the United States, they were at a huge disadvantage. I mean, everyone knows this. We all have a phone. Everyone walks into their local retail store. They see a product they like, and what do? You log on, you Google. Amazon has it for $5 cheaper. 2-day Prime, no charge shipping. You press the button and you walk out of the store. So, I mean, that was a real fact, and small businesses were getting killed by it. So there were a lot of people that wanted South Dakota to win this case. So then the court also found that the rule treats economically identical actors differently for arbitrary reasons. The same exact company, okay, one that had a relationship or some connection or one employee in South Dakota, okay, versus a company that didn't have an employee in South Dakota, were taxed differently in the state, and that was found to be against Commerce Clause rules. And then many strong words were used in the opinion as the court determined that Quill is unsound and incorrect interpretation of the Commerce Clause. Interestingly enough, one of the comments they made is they come back to the auto case, is that substantial nexus should really be the standard, and they were going to allow the states to define what substantial nexus is and not just rely solely on what the Quill case said. It was really interesting because the Supreme Court really liked what South Dakota was doing. All right, and so the Supreme Court noted in its ruling that several factors in the South Dakota legislation they would believe should be considered by every state. So number one, there should be no retroactive application of any law, which is really important for everybody. the application and collection of sales tax should not be a burden to the taxpayer. Okay, South Dakota is part of the streamlined sales tax agreement, which are, I think, 24 other states right now, and it makes it very simple. There's certain requirements, especially when there's a local tax, how to collect that tax. There's still states such as Colorado, Alabama, Louisiana, and Alaska that have very complicated local sales tax collection rules, which would be considered a burden by the Supreme Court. And then all laws should have a reasonable threshold as not to hurt mom and pop shops. So this should not become a burden on companies that are smaller and have sales across the country, because there is a cost, as we're going to see, to implementing this. So let's talk about this real quick. I talk to people every day about South Dakota versus Wayfair. I had a client on the phone the other day, and they said to me, "Hey, I heard there's a bill to overturn South Dakota versus Wayfair." Well, yeah, there is a bill, but it's being pushed by the bill's right down here. 4 senators from states that do not collect sales tax quickly went to work on what's called the Stop Taxing Our Potential Act. And this was basically senators from New Hampshire, Oregon, Wyoming, and Delaware that are trying to overturn this. So where is it going to go? Probably nowhere. Also, don't forget, over the last 15 years, there have been several versions of proposed legislation by many congressmen to balance the playing field with out-of-state sellers, including efforts such as the Marketplace Fairness Act, which really had little effort to show for it. So I think Representative Heitkamp stated back in January that she was absolutely thrilled. Heitkamp was one of these congressmen who has really been pushing Marketplace Fairness Act and many of these proposed legislative laws. No doubt she was from North Dakota, and Heitkamp actually had she was very involved. I think she was with the Department of Revenue back in 1992 when North Dakota lost that case. So when she heard the Supreme Court was going to hear the case, she was very excited. And after the ruling, she had basically made a statement that states should be given the opportunity to review the court's decisions and pass its own legislation. So there's kind of a mix back and forth here on what's going on. The general census is, Bloomberg put out another comment today, another email, and a few other organizations came out today that says it looks like Congress is not going to be able to act at this time. There seems to be not a desire to act and really to give the states the time to come out and tell us how they're going to handle this court decision. And here's just a few other comments. I love this one. Montana's oppose the sales tax, and our businesses shouldn't be forced to collect the sales tax to shore up the finances of other states. There is also a state bill proposed in New Hampshire. So besides the federal bill, there's a state bill. Anyone from the Northeast loves New Hampshire. We know they kind of, they go to their own tune. They don't care what anyone else does. And I've got the, their motto there, live free or die. But New Hampshire basically came out, and they're trying to pass a law that would require any state that's going to try to force New Hampshire company to collect sales tax in their state to basically come to New Hampshire and get permission first. So New Hampshire needs to review their application and their reason why, and that they can't force companies to do that. So again, where's it going to go? We really don't think anywhere, but we are keeping our eye on the ball. So, all right. So we have the Wayfair case. Everyone agrees what's going to happen now, for the most part. We're keeping an eye on Congress. We don't think there's going to be a lot of movement there. So now the next question is that what's going to happen next? And this is really the question. This is what I want to spend the next 15 or 20 minutes on during our presentation. So first of all, the states need to pass an update on their current statutes to reflect the ability to collect sales tax for out-of-state sellers. There's 3 scenarios we're looking at. We're looking at states such as South Dakota, which have rules in place that the Supreme Court likes. So South Dakota has to complete the judicial cycle and go through the court system. That should be done, they're thinking, by the end of July, end of August, middle of August, end of August. And their law will probably be effective around October 1st or November 1st. So there's several states in that position, South Dakota, Tennessee. I think there's currently 23 states that have an economic nexus statute. There's states like Wisconsin, which still have a physical presence test, and they never pass an economic click-through nexus or any of these rules. So we were wondering what states like Wisconsin would do. Are they going to pass legislation, or are they going to pass a rule? And Wisconsin came out and basically passed the rule. They said, you know what, we don't think we even need legislation. We're going to pass an administrative rule, and this administrative rule is going to say that if you are selling into Wisconsin and have $100,000 worth of sales in the prior year, or 200 transactions, I think they took the standard language, that starting on October 1st, 2018, you need to collect sales tax in the state. We'll see what sellers do. We'll see if they follow that. But it's very interesting that Wisconsin attacked that with a rule, an administrative rule, instead of actually going through the legislative process. Alabama was interesting because Alabama did not tie their rules to the Supreme Court like South Dakota and other states. Alabama says our law has been in place for a year and a half, and that's really it. And we believe that the Supreme Court case just upholds what's been in place. But Alabama did say is that, but since the Supreme Court said they really don't want any retroactive effect, that what we're going to do is we're going to take our law, and even though it's been around since I think it was 2016 Alabama, that the enforcement date, we're hearing this a lot. So we have legislative effective dates, which could be the last couple of years, and then we have enforcement dates. So the enforcement dates on this law for Alabama is going to be, I think, October 1st, 2018 as well. So we're going to go through some of the states in particular, but that's what we're waiting to see. We're waiting to see what each state does, what the rules are going to be, how they vary, and then how to apply those rules. So what companies need to do, and we'll take you through this analysis in a few minutes, is that they need to analyze their sales by state to determine where they'll need to register and begin to collect sales tax. And of course, as a result of this, accountants and consultants will have a very busy summer. This is looking to be the busiest summer that I've had in years. And Avalara shareholders rejoice. Who is Avalara? I don't know if anyone knows what Avalara is. Avalara is one of the leading sales tax compliance companies in the U.S. Avalara, 3 months ago, guess what they did? They went public. And they went on the stock exchange in anticipation of the Supreme Court ruling coming out. So my next chart is a look at the Avalara stock on June 21st. And we could see that huge spike there in Avalara stock price. So the market liked it, Avalara liked it, everyone was really happy. And we know at a minimum there is going to be a significant increase in sales tax returns that are going to be ready to be done. And, you know, part of what we do at PMBA is, you know, we partner with all these firms. Each firm has, we'll share with you a little bit later, each firm has unique things about them which help various types of companies. But Avalara is definitely one of the leading companies. They've made a major investment in their product the last 2 years, and they have a great product. Okay, so this is a moving target, and I want to give you some updates. Just over the last week, we've had several updates from several states, which were really interesting. Rhode Island came out yesterday, and it was a little scary because Rhode Island has had a law that's been in effect, I think, for a year and a half. And all they came out yesterday and said is, we're very happy with the Supreme Court ruling. They came out with a FA&Q on non-collecting Rhode Island companies. And they basically said, listen, if you, underneath our economic or marketplace statute, if you're currently collecting sales tax, keep collecting sales tax, you're doing the right thing. And if you're not collecting sales tax, please register and collect sales tax. What Rhode Island didn't do is they did not come out with an effective enforcement date, which would have been really nice. So it's kind of left the door open to them if they make a decision at some point to go back. And companies that are registering now, but maybe have had sales for the last year and a half, there is some risk there in Rhode Island. And you should just proceed with a little caution with Rhode Island. North Dakota came out with a very nice, clean announcement. Okay, North Dakota is going to require remote sellers based on the results of Wayfair to collect sales and use tax in the states. If they have, I think it's 100,000. North Dakota has just followed most states, $100,000 in sales in the prior year, 200 exceptions. And North Dakota came out and said that you will have starting October, you have until October 1st, 2018 to get ready to prepare to collect taxes. So North Dakota, they call it their small seller exception threshold, which is 100,000 or 200 transactions. Indiana came out a few days ago. Indiana basically came out and said that the Department of Revenue is currently prohibited from enforcing the obligation to collect sales tax for remote sellers until a declaratory judgment action currently pending in the state of Indiana is resolved. So Indiana is very similar to South Dakota. they need to go back and they need to clear up the issues in the state court system, but we expect that to happen through the summer. And we expect Indiana to come out with an enforcement date. You know, they've had an economic nexus statute in place, so they're going to come out with an enforcement date of later this year. Wisconsin, I mentioned, was really a surprise. I don't say a surprise, but it was interesting to see. So Wisconsin basically came out and said that October 1st, effective October 1st, 2018, consistent with the existing Wisconsin statutes, not really sure what that means, which requires all sellers collect sales and use tax unless limited by federal law. So there we go. So there's no more limit. There was a limit prior to the case, now there's not. That they basically came out and said that if you have $100,000 or more in the sales in the state in the prior year, or 200 or more separate transactions, that effective October 1st, 2018, you will need to collect sales tax. Again, the interesting thing about Wisconsin is this is an administrative ruling, okay, taking their law and applying an administrative analysis and result to it and creating a rule around that. We'll talk about, I think I added New York. New York's not on this slide, but we had a announcement by New York on that as well. And then Alabama, I talked about that before. Alabama, I was encouraged when we saw this because Alabama gave clear guidance. Alabama has a rule. I think it's the marketplace nexus, economic nexus rule. It's been in place since 2016, but it'll only be applied prospectively to sellers on or after October 1st, 2018. Although the rule was effectively in place since 18, the validity was questioned pending the outcome of Wayfair. Alabama's rule is a little bit different. It's $250,000. They have a small seller exception. I don't think Alabama has a volume of transaction rule. I think they just have a 250 rule. By the way, I'll share with you at the end a link to our website. We are tracking every state. We're tracking every state's threshold, every state's position, every state's effective date and enforcement date on our website. You can visit that daily for updates. This is a little daunting and a little challenging, especially, you know, for CPAs, for multiple clients, hundreds of clients trying to manage this. So visit our website daily. We try to also send out the alerts for the important states that come through. So I added New York to my slide. It's not on here. So New York came out today and reported, I think Democratic Congresswoman from the state, that if New York has to pass legislation, that they would pass legislation and look to do it, she mentioned within the next year, the next session, which could be not until 2019. But it's interesting, she used the word if several times, implying that New York is probably looking at an administrative rule to apply to their current law, like Wisconsin did very neatly, attaching it to their legislation that referred to federal law. And I think if New York can pass a rule, they will pass a rule, because that will short-circuit their ability to get a bill passed, which could be a little challenge in any state, especially a state such as New York, which is going to benefit tremendously from this, but there are also going to be, you know, many companies, New York, Texas, California. It's going to be a tremendous increase in reporters to those states. So those are some recent updates, and these are happening every single day. Like I said, our job is to stay on top of it. Okay, so whether you're a company or you're a CPA firm handling multiple clients, how should you analyze Wayfair? When you leave this presentation today, what do you need to do? What do you need to think about? Again, this presentation is based on the fact that Wayfair ruling is here to stay. We are advising our clients to be prepared, be proactive, and be in a position, because there are several things that need to get done. You know, if you, let's give you an example. If you're an average client, an average company, let's say $50 to $100 million in revenue, you've had presence in 1 or 2 states for the last 30 years, you've only filed 1 or 2 sales tax returns a year. That company now is going to probably required to file anywhere between 20 to 30 states. So where sales tax before was kind of just the throw in and really wasn't a big deal, and maybe one of the accountants, the staff accountant was doing it, well, the rules have changed, and now instead of collecting a few $1,000s in sales tax a month, you know, a company of $100 million in sales is looking to, you know, possibly collect $5 million a year in sales tax. And when you start collecting those kind of numbers, there's lots of issues around that, including treasury issues and cash management issues. So here's what you should do after the meeting today, after our presentation next week, come back from vacation. First of all, companies should start with sales by volume and sales by dollar amounts per state for 2017 and 2018. most of the legislation, most of the rules and the statements that have come out have referred to sales in 2017. That's how you're going to evaluate if you have nexus for 2018. But there are a few outlier states that have included end 2018 into the analysis. So we suggest companies go ahead and pull this data for 2018, complete your little nice Excel matrix. Then you need to go to our website or contact your accountant, and you need to overlay those results with the results of each state. What are the effective dates of each state? What's the dollar threshold for each state? Okay, this little simple analysis is going to highlight from you the states that you need to be concerned about. Oh, by the way, there are several states that have an effective date of July 1st, 2018. Off the top of my head, Vermont came out right away and said, we have a law in place. We're going to apply it prospectively, but prospectively is today. And Hawaii came out, Vermont came out, and I forgot a few other states that came out. I think there's maybe 3 states in total that have an effective date for July 1st, 2017. So don't hold your hat or hang your hat on that 10/1/18 date, which seems to be the most popular date right now, because there are some states that you could be required right now to do. So once you determine the potential states where new sales tax filing exists potentially, you have to determine if your product is subject to sales tax. For example, you may have nexus, but you may have 100% exempt sales for resale or sell products that aren't taxable. And so the states have not come out for years. We've advised our clients in states where they have physical presence and they have a lot of activity, even if they're not responsible for collecting sales tax, let's say a manufacturer, 100% sale for resale. We've always advised that manufacturer to file 0 sales tax returns, and in many cases they have a use tax liability anyway. But even if they had a small use tax liability, file 0 tax returns, because that starts the statute of limitations. If you make a mistake, okay, if you sell taxable product or one of your divisions of your company sells to contractors and you didn't realize it, you know, that could basically taint your analysis in that case. The states have been unclear if they want thousands and thousands of 0 sales tax returns. Some states have come out and said, please only report and sign up if you have taxable sales, and other states have used gross sale language. So whether it's taxable or gross sale language, again, this will be part of your analysis, and this is part of the information that we can provide you, help make that determination. And then you need to determine if your product is taxable. One of my clients sells breast pumps. And it was funny, we did a whole analysis for the client a few years ago to determine are breast pumps taxable in all 50 states, because she was selling in all 50 states. And then we realized breast pumps could be defined as DME, durable medical equipment. So now is durable medical equipment taxable in each state? So this analysis can become a little tricky. Again, 30 days ago, you were worried about 1 or 2 states. You know, now you're worried about doing this analysis in 30 states. So get on top of it, jump on it, make a decision. One of my other clients is, they do CPM, cost per click advertising. And last year we realized that they also sell software. And they started selling software. So all of a sudden this company, which is a pretty large company, $200 or $300 million in receipts, went from just doing professional services to realizing that they have significant dollar amounts now in taxable revenue. So again, you have to see if your services are taxable and make that decision. Now you also have to understand the new economic nexus standard does not eliminate the physical presence test, okay? So if you have people, property, activity in a state, okay, if you send salespeople into a state, sales agents, employees into a state, you still have to analyze the physical presence rules. It is still possible, all right, that you do have filing, sales tax filing requirements in those states. And it's very likely you will. Once you've determined how many states you'll be required to collect sales tax in, you must analyze your internal systems to determine, all right, how are we going to do this? Can you integrate a current software solution, or will you have to customize your billing system with rates and determinations? A lot of our clients have old legacy systems, whether it's for manufacturers, retailers, and they can't easily integrate an Avalar or a Vertex or OneSource into their system, or they can at a very high expense. So you need to get ahead of this and figure out what's going on, and once you realize you have to collect in 30 states, you need to come up with a plan of how you're going to do that. Also, states are releasing determinations, like we said, on a weekly basis. So after you do this analysis, you have to stay on top of it, whether it's visiting our website, SalesTaxInstitute.com has a great website. TaxJar's got a lot of content, great information as well. But you have to stay on top of what's going on. So we have that done. We're going to talk about this in a minute, but once you get that whole information done, you're done with that analysis. 3 other steps. You have to choose your compliance option, which we'll talk about a little bit in a minute, register, and then begin filing. So let's talk about compliance options a little bit. I've summarized it into the next slide into 3 different areas, but I briefly talked about this already. Once you realize you have to file, what are the next steps? Well, how many states are going to be required to file? And that's a key point. Okay, if you're coming to us and you're asking us, we have 5 states versus 30 states, we're going to have different providers that we're going to suggest. What are your filing frequencies? Are you a monthly filer, a quarterly filer, or an annual filer? That's another part of the analysis. Do you have, if you're if you're a monthly filer, if you're filing in 30 states, that can mean now you're not just doing 30 returns a year, you're doing potentially 300 or 200, 300, 400 returns a year. And then you may have local situations to deal with. How many platforms are you utilizing? I have people that come to me, we love TaxJar, it's a great product, but TaxJar basically allows for one integration very easily into a lot of systems. So we do recommend TaxJar to a lot of our clients. But do you have multiple platforms? Are you selling on eBay, Amazon, website? Do you have a retail location? Okay, if you have multiple platforms you're selling on, your compliance options are going to be different. Are you selling both taxable and non-taxable items? Again, if you are doing that, you have to work with a company that has those tax decisions on it. So we talked about, can your system integrate with third-party software platforms? How much assistance do you need on a monthly basis? Okay, we bid a lot on sales tax compliance at our firm. And I always have people come to me and say, hey, Chris, we got a quote from you, from Vertex and Avalara. Well, your quote's about $10,000 more a year than Vertex and Avalara. What's the difference? Well, the difference is Vertex and Avalara have tremendous platforms, but you have to have an internal resource to manage that platform. Someone needs to look at the sales tax returns are coming out every month. If a new product comes out, someone needs to code that new product if it's taxable or not. Someone needs to analyze your sales to see if you have new states you have to file in. So you need to decide how much assistance do you need on a monthly basis on dealing with the compliance. So you have someone internally you can train for it. And do you want sales tax payable accounts reconciled? Again, a company with now $100 million in sales now has this $5 million accounts payable account that they need to reconcile and keep track of and make sure that that's balancing out every month. Again, when it was 50 grand a year, not a big deal. Now at $5 million, you want to make sure that you're balancing those payable accounts between the states. So this is a real simple slide, and I just want to simplify it for today, but we can have further discussions. I group this into 3 things. Manual return completion by CPA or specialty firm. This will generally cost you $50 to $225 a return. This is for a company that has old systems. You can't integrate into a new platform. Very complicated transactions, mix of taxable and non-taxable, and need a lot of monthly assistance. Now, in many cases, the CPA or specialty firm actually may be using an Avalara or OneSource or Vertex in the background, but there's a lot of work that they're doing before the information can get into their system, and then there's a lot of things they're checking and a lot of activities going on. So we have several clients like that we manage, and we manage through a Vertex or Avalara TaxJar platform. But we also charge a fee to manage on a monthly basis. Okay, Avalara, Vertex, OneSource, all these firms are great out there. The price drops down significantly. We're looking at $20 to $50 a return. All right, but you need to be able to have direct integration. Okay, you need to have high volume of transactions. Okay, lots of monthly returns make sense if you're going into there. If you have a mix of taxable and non-taxable, and then little monthly assistance from an outside firm. All right, so again, this is a great option. A lot of companies fit this option, but then you will need to train someone internally or rely on an outside consultant to look at that system, monitor it on a quarterly, annual basis, and be able to, update it. And then there's great options. TaxJar, I think I have $25 and below. Some are even below out there. I'm sure there's going to be more players. TaxJar is a very minor 0 setup fee. They're great for Amazon FBA. Just plug and play into them with a click of a few buttons. If you have clients that are simply on Amazon FBA, TaxJar is a great option. Complete integration, high volume transactions. Only taxable sales. There are some limitations, and this was as of a few months ago. I don't think that's changed. We talked to TaxJar yesterday about use tax. They can't handle or report use tax yet, so that's a limitation, but they're working on it. But again, for a very simple company, e-commerce platforms, Amazon FBA, that's the best cost option that we're referring people to right now. All right, so you've analyzed your states. You know where you need to report. You've registered company. You've picked out your compliance options. The next thing is obviously we need to do sales tax registrations. So once companies have decided to collect and remit sales tax, you have to go and register these companies. And there's a couple options. Again, you can use consultants. You can handle these internally. If you're a CPA firm, you can find a resource internally and train them how to do it. All the websites, state websites, offer you options to go right there and do it. You can use a third-party service. We actually have a website. We started it about a year ago called salestaxregister.com. And I think the price is $99. You can go there and enter your information and check the box for 10 states, and we'll go ahead for $100 and register you in those 10 states. If you're using sales tax like an Avalara or Vertex, I think they may have options as well. One little known option, although it does have limitations, is you could actually register in the 24 states that are streamlined sales tax states for free at one time for no charge. So if you look at your analysis and you realize, wow, these 24 states, I'm going to be in 20 of them, you may want to look at that option and register there. Really a simple way to do it. We've had some clients that have had a lot of success with that. Okay, we have a lot of CPAs on the line today, so I wanted to just take a few minutes to talk about what do these opportunities mean to CPAs and their clients and how they can really generate some more money from this. So traditionally, CPAs have treated sales tax as what I call a throw-in as part of a corporate tax return. Okay, clients have $10 to $100 million in revenue. They're filing income tax returns in 4 or 5 states. We have the federal return to partnerships. We're doing the owners, and they have maybe presence in 1 or 3 states. And many times the CPA won't even do the returns. The owner will say, hey, listen, we're just going to handle those internally. Not a big deal. Okay, and there usually hasn't been separate fees. I've worked with many CPAs. I ask them about sales tax, and they don't have a separate charge for it. They just figure it out. $10,000 to do the tax returns a year, and we throw the sales tax in there. Well, those same clients now, okay, are now going to have nexus in 20 to 30 states. You can't throw this in anymore. You need to tell clients, all right, A, we need to do the analysis to figure out how many states. Okay, B, there's going to be a fee for the analysis. C, once we do it, we're going to have to help you, or someone internally is going to have to take care of this. So CPAs will need to do the evaluations with clients, including how to implement new compliance options. CPA firms should look out to partner with companies like Avalara, Vertex, TaxJar. A lot of these companies, Vertex pushed for 2 years, and maybe they were just a little ahead of the game. They pushed special arrangements. They were aggressively going after relationships with CPA firms and partnerships with them. So all these companies have a channel or a partner agreement with CPA firms to work with you on your clients. And I think as part of that, there is a managed stream of revenue that comes after the referrals that you send there. Some more money you can make. Let's see. Here we go. We talked about CPAs will need to assist their clients with sales tax registrations. More sales tax filing results in more future sales tax audits. Again, the average CPA with a client, $100 million client, is dealing with maybe an audit every 4 or 5 years. You can expect 2 to 3 audits a year now annually from these states with those high volume clients. CPAs are going to need to do research, determine if their products or services are taxable in certain states. CPAs will need to evaluate the impact of collecting and remitting sales tax on income and gross receipt tax laws. I've had that question the last couple of days. If we start filing in all these states for sales tax, what does that mean for income tax? Well, I mean, most states would say that, most people would say, well, the rules for income tax are pretty much have been laid out by most states already. Certain states are aggressive. Washington, California, they've come up with these very low economic nexus. There is the concept of economic nexus already regarding income tax, and that is not my area, so I'm not going to talk about that today. But again, just questions that CPAs have brought up, my clients have brought up. Also, once you train these internal people now on all these sales tax skills, now you can help out with VDAs. You can learn how to get sales tax refunds. Okay, you can learn how to do tax determination matrices. So these are all revenue generating opportunities that you can help out your clients with. So this is a really good moment in time. Again, I envision, just like every decent sized CPA firm has people that you know, or they're solid go-to state, local, or federal income tax guys, you eventually will have, you know, your solid go-to sales tax person. You know, it's going to be able to handle all these questions. All right, so what are we doing? We're coming to the end here. I've got about 12 minutes left. I want to give a little bit of time for answers and for answering any questions that are out there. What are we doing at PMBA? Well, first of all, we have an awesome portal. I'm very proud of it. We spend a lot of time every day. Here's a little snippet of our portal. So every day you can go there, you can run your mouse and hover it over each state. It'll tell you the effective dates, the dollar thresholds. As each state is coming out with a new alert, we're adding those alerts to the bottom. So great tool for CPAs, great tools for companies that come and use this portal on a daily basis and check out what's going on. PMBA is also working with clients, our companies, and CPA firms to do what we're calling economic nexus evaluation reports, okay? As part of this report, it's going to be a fixed fee depending on the size of the client, the size of the company. We're doing initial 30-minute meetings with the client to review their products, services, and internal systems. We're doing a short memo, a short chart analysis with the clients to analyze their sales for the prior year to determine where they have economic nexus. We're doing analysis of the client's sales to determine the taxability of their products if requested or required. Okay, if all you sell is, you know, TVs over the internet or electronics over the internet, there's no need for that, but that's really only a portion of our client base. We're identifying immediate filing requirements. So when you get this evaluation report, we lay out where you need to file today, where you need to file on October 18th. We provide you with 3 different compliance options. So we take the information that we've gotten about your systems and your sales, and we come back to you and make 3 recommendations for compliance options going forward. And the most important thing that you get from this evaluation report is we monitor the enforcement dates for the next 12 months and provide real-time alerts for potential new filing obligations. All right, so when Michigan comes out and tells us what the effective date is, you get an email that day from us. Michigan's come out, the day is October 10th, it's November 1st, October 1st, be on alert, and then we'll send you reminders. We'll send you 2 or 3 reminders and follow up with you to make sure that you've added that state to the filings that you've done. So that's a nice product. And again, this is CPA firms are welcome to piggyback off of this, work with us to do that. I'm going to share with you what else we're doing, which is really interesting. We're also offering sales tax boot camps for corporations and CPAs. So here's the deal. This consulting work isn't going to exist forever. We know that. We love working with our CPA partners. You know, we want to get through this period the next 2 years. We're going to be really busy, but we're looking to really educate people. So here's what our boot camp is going to do. First of all, we're going to send a few days pre-evaluation meetings to discuss with companies their sales activity and the products. And then what we're going to do is we're going to come to your site for either a half a day or full day sales tax boot camp on-site training. So if you're a CPA firm, you could have maybe 15 people, as many people as you want in the room, and you're going to select your 2 or 3 people that are going to become your sales tax experts. We will spend either a half a day or a day training them on all the different sales and use tax fundamentals. We'll talk about how to do a VDA if you've never done one. We'll talk about how to do a tax matrix. We'll talk about the different research tools that are out there, RIA, Thomson Reuters, CCH. We'll talk about compliance options, sales. We'll teach you about sales tax refunds. Did anyone realize that you can go out there and collect money for sales tax that companies have overpaid? And we'll talk about audit defense strategies. So those will be either half day or full day intense seminars with your staff, and we'll be on site. And then as part of that deal, also half day or full day review of either the company's facts and circumstances specifically or the CPA client list. So what we'll do is if we spend a half a day on training, the back of the end, we'll go through your client list and we will create a list of immediate consulting opportunities for your firm. And those are opportunities that you can go out there and handle yourself, or you can go ahead and partner with on those opportunities as well. And then finally, we're going to give you ongoing support from the PMB sales tax team. So you'll be given a contact at our company. We currently have about 12 or 13 people full-time dedicated to sales tax. So you'll be given a contact there to reach out to us and ask us questions. We're not sure if it's going to be hourly based or time based. We'll figure that out from project to project. So it's going to be a great opportunity for companies to take advantage of that.